This is the chart of gold priced in US dollars on the weekly scale, and the expectation is still that we would see a triangle forming here. It's not ready, it's not finished, and when it's finished, when it's ready, it is likely to soar in a C. Okay, it's going to top above this level and will give us a spectacular flash run that would be actually quite tricky. Okay, will be maybe perhaps something like that, but we are not expecting anything that will top the previous high here, not at all. And later on, when it is done, it is likely to slump back. Okay, this is a long-term line of support built during the early years of this magnificent bull run. Gold has managed up to now to stay away from this line, so the support is still there, if you like, on the horizon for gold. In the case of silver, I will quickly flip here to silver. You can see that silver needed that support on quite a few occasions, and that should immediately raise in your mind the association of what I have explained concerning the chart of the Australian dollar US dollar. You surely remember that, and you see silver really needed that, so this is obviously an extremely important support level. I'm going back to gold, and I'll focus now on the triangle that I assume is taking place here. Here's my daily scale. That's the A, okay, where I assume that it will have life. Yeah, this bull run that started here will have a life once the B is over. I assume that we had an A behind us, B behind us. We're working on the C. Off that C down that you see, we have so far just let me show you here. We have just the A. Okay, so we came down in an extended first. 1, 2, 3, 4, like that. That's our fifth, and that is basically our A. That's the idea. I don't need this twice, sorry. I also don't need this. So that is basically the clean wave count, like that. It's showing you 1, 2, 3, 4, 5, and come back here is supposed to be our B. Now, of course, I could be wrong. It could be that there is something else happening here. But the assumption at this point in time that that's our A and it's working on the B. I'm going to go into, let's say, 15 minutes. So you can see the various subdivisions on a very minute scale here. We can work with a 1, 2, a stretch third wave. With a 1, 2, 1, 2, 3, 4, 3, 4, 5 that nails first leg up, either as A or 1, okay, gets you 2 or B, and that could be you C developing here. The assumption, of course, is that it will not have long lease of life. What I mean long lease of life, that a C on the black scale that I'm showing you here, yes, don't confuse with other labelings that you see here. I'll explain what this is in a minute, but the idea is that if this is an A and that's a B, we could have a nice C going up, but I doubt it. I doubt it's going to make headway above 1324, 1332. It's probably going to reach the other side of this rising channel. Okay, it's going to reach this, something like that, and then I will not be surprised to see it slumping all the way down. Okay, so be mindful of that. I could be wrong, of course, and it's going to establish a base about 1340, 1336, and that should tell you that I'm probably wrong. I missed something, and the alternative wave count will most likely be that this is a 1, 2. That's going to turn out to be a 3. That's probably a 4, and it's targeting the top in a 1, 2, 3, 4, 5, and that will call for reassessment of this wave count. Okay, this will have to be subdivided differently, because if you get a clean run of a 1, 2, 3, 4, 5 reaching the top, actually exceeding slightly the top, inevitably that's going to take is going to impact the interpretation of what you see here. It may even throw us back. I'm going to show you something here. It might throw us back to a revision of the wave count. Let me show you here. You see, if we run through the top here, then inevitably it calls for reassessment of this descent, and it calls for a consideration that in fact we are in an extremely bullish setup here. That is our 1 or A, that's our B, probably terminating here, and then that's 1, that's 2. Okay, I'll put it with arrows so you will see exactly. You see, that's your A, that's your B, that's your 1, that's your 2, that's your 1, that's your 2, and it's shooting high in a 3 of 3. 1, 2, 1, 2, up it goes in a 3 of 3. So as soon as it runs back towards this level, that's already a big red alert that this wave count might not work, meaning that I'm looking for that triangle to last for another 6 months. No. The gold is not going down this path. It is likely targeting higher highs sooner than I think. Okay, so that is the red alert for the shorts. Otherwise, let's flip back to the 15 minutes. Let's take it here on a smaller scale, and let's assume that we're going to have this slight extension, but it's not going to hold. It's coming back. It's going to sink under 1290, 1292. That's a bad sign. That's a sign of weakness. There is another alternative, as you can see with move labelings here, that could be taken as an ABC X ABC. Okay, it could be actually very close to termination. It might even begin to slide fairly soon. If it does that Monday, Tuesday, then forget about the scenario that is going to shoot a lot higher. The scenario of the triangle is the most likely scenario here, the big scale triangle. And by the way, if you examine the setup here of an ABC X ABC and you go back and refer it to the wave count that I showed you concerning the Australian dollar US dollar, you will see something interesting. Because if you remember the Australian dollar US dollar, we said that it doesn't look like we have a 5-wave run developing from the recent bottom, and it does look like a compilation, yeah, a whole jumble of ABC X ABC. It looks like we have the same thing here, perfectly possible. Okay, here's silver. That's the daily, and the expectation long term is that will turn into an ABC terminating a B, and silver somewhere down the road is going to come back and potentially break under the low here, terminating a giant ABC. Okay, at this point in time, I'm only focused on what's happening here. I'm doing my best to try to understand as soon as possible when the B on this scale is over. Okay, if indeed we are dealing with a B on this scale and it's not something else completely. Let's have a look. I'll go now to the 60 minutes. So in the case of silver, we appear to be 1 or 2 steps ahead. Do you remember that I emphasized that on a few occasions in reference to the development of the triangle in the case of gold? Yeah, because here we seem to be already with our A, B, C, D, and silver seems to be busy now tracing the E leg. But as I explained, you're never going to have gold running up very sharply whilst gold doing nothing, meaning going sideways. They are going together. So that means that silver is likely to wait. If I can put it this way, silver is likely to wait, meaning the E leg could in itself turn into a triangle when spend a long time here between 18.2 to potentially the floor here at 14.4. Okay, coming down here on the 4-hour scale, we treated this as an A, 5-leg run. Okay, this is an A. We're taking the big rebound here as part of the B, and let's go and examine now the 15 minutes. So here's what I see. 1, 2, 3, 4, 5. That's an A, that's a B. We are still looking up for the termination of that C that will send later on silver sharply lower. Okay, A, B, C like that. So again, that's your first leg down, complete 5-wave run. Very neatly drawn here by Mr. Market. 1, 2, 1, 2, 3, 4, 5, 3, 4, 5. Okay, with an A, B, C, D, E like that, and then plunge, 5th leg. 1, 2, 3, 4, 5, A, B, C. Yeah, quite a bit of run here short term, and then sinking. You know, this is a C. This is a C inside that big triangle. Okay, short term breaking under this level is a sign of weakness. Okay, breaking under 17 in on Monday, Tuesday, it's a sign of weakness, definitely, and it's quite possible that the B actually ended here. And what we have to do, we have to subdivide this differently. Okay, we have to consider potentially A, B, C, X, A, B, C, and our B will have found an end here, and we go down in that C.